Hey guys, welcome back to the channel. Sorry that it's been so long since I've done a portfolio update. I think the last one I did was either at the end of September or early October. Just been a little bit busy, but I wanted to go ahead and update you guys on where the portfolio is at. We've got just about a little over a month before the year ends. Market's been in a little bit of a pullback here, so there's been some nice opportunities. So let's go ahead and get right into it. So as you can see here, over the last basically since November has started, we've seen a significant pullback here. Um, I'm not sure exactly where we're going to bottom out. I've just been slowly adding to positions on areas that I've liked. It's been rough. My portfolio overall was up almost $5,000 since switching to interactive brokers from Robinhood in September, and now I'm down almost $3,000. I'll end up showing you guys all the positions that I'm in and everything like that. But this pullback has actually brought quite a bit of pain to tech and the overall market in general. So you can see here I have this level marked out on SPX. It held here on Friday. This was the October 9th low. That was that big flush we had on a Friday. From I think it was the tension with China that Trump had tweeted out was this big candle. We ended up rallying back up. Everyone thought we were super bullish. I was a little concerned that we were a little too strong heading into the end of October, and everybody thought, okay, well, November and December are seasonally strong. I had thought the opposite. So this isn't surprising that we've had these massive reversals and we're having these down days now. This is what I had kind of thought. So we're approaching the end of November. We're coming into the last week of November this week, early into next week. Um, so we'll see what happens. We'll see if we get some seasonality start to kick in here. The big thing in December is going to be what is the Fed going to do as far as are they going to cut rates or are they going to leave them the same? I think they need to at least cut 25 basis points. If they don't, I don't think the market will like that at all. And I think we end up seeing selling pressure into the end of year because of that. As far as the NASDAQ, so I think the Nasdaq's down about 8% or a little over 8% right now. So 7.5, whereas the S&P 500 is only down about 5%. As far as NDX, once again held a level that I was kind of watching. I had this level pivoted here. I am in the camp that we haven't bottomed yet. And I'll tell you why. I believe that the VIX, you can see here that it came up to this prior level here of 28 and rejected. And that's why we got that little bit of a relief bounce on Friday. But most of the time you can see here, back when we've truly bottomed, the VIX has been really, really high. I mean, in the 50s. Even this one was from the yen trade in August 24, 65. Now, I'm not saying we got to get all the way up here, but I think we need to at least crack above 30, maybe even get up to this 35 area to consider that there's a lot of fear in the market and people are really unwinding positions and a little bit of fearful. A VIX at 23 doesn't necessarily tell me that there's a ton of fear going on. So I would am leaning in the camp that there's going to be some time in the next 2 weeks, whether it's next week, it might not be next week because a lot of traders will probably leave early because it's a holiday week with Thanksgiving on Thursday, but possibly the following week, going into that first week of December, you could see some volatility pick back up. And that could be the time where we get one more good flush down. So let me go to SPX and show you where I believe we could be going, or where I would be inclined. So there was a lot of consolidation from July through September around this level. So you would probably call it like 6,400-ish is what I would probably say. So 6,400 to probably 6,450, somewhere in this general area where there was a lot of consolidation, a lot of price action in here, is where I think that we could be potentially headed for. Now, if we really got a nasty flush, this would be the best thing heading into 2026 to end the year, is if the market pulled all the way back somehow before let's say mid-December, because I still do expect there's going to be some form of Santa Claus rally. Now, whether that's a week or two towards the end of the month of December, I still think that positioning wise, people are under positioned in the market, and I think that they're adding on this pullback. And I think if the market goes further, I think a lot of people will get more aggressive. That's just my take on it, but I could be wrong. So if we got a pullback to this anchored VWAP from the all-time highs, that would be 10%, which would be a normal healthy correction, 5 to 10% in a bull market, get us to this anchored VWAP. If we undershot and hit the 200-day moving average at 61.60, that would be even better. That would be a best case scenario for bulls long term. Now, I'm not saying that if we don't get a deeper pullback, that we're not going to eventually continue to go higher. I just think that if you get one big good flush of a pullback, I think that you have room to run from maybe mid to end of December into maybe early February. Before maybe you could see the next 5% pullback or something like that. So you could have a good month and a half window of real good upside if any of this really occurs. Now, if we've bottomed here, I'm not really sure where the ceiling is. I think that maybe 7,000 on SPX by year end, but that's not a whole lot of upside here. You're already at 6,600, so you got about 400 points in a month. That's good return, but that's not anything great. So like I said, I'd like to see us flush down and maybe to this 6,400 area. As far as the NASDAQ, this is the next level that I'm watching. You can see here there's been multiple support tests here. So this could be a potential area that if the NASDAQ fails to hold this level, that this could be the next area that we could be headed here. Now let me put an anchored VWAP on the bottom from the tariff. Okay, so it's a little bit above, it's a little bit below that level. So once again, I would love to see the market, the NASDAQ here, pull back, and let's see how far of a percentage. So that's 13%. That's pretty significant for the tech-heavy NASDAQ to pull back that much. I mean, a lot of these stocks here that I have on this AI list, NVIDIA, Broadcom, Oracle, TSM, a lot of these stocks would be in some serious selling pressure at that point. Do I think that that's necessarily going to happen? I'm not sure, but that's what I'd be preparing for here if I was you. Having areas marked out where you would be ready to deploy cash. So I just don't think that at a VIX of getting high up to 28 is necessarily capitulatory levels. And I think that there's probably some more selling that's going to come into the market. If I had to guess, in the next 2 weeks. I don't know when. We'll see what happens on Monday and Tuesday. By Wednesday, a lot of participants are gone, so I guarantee you Wednesday's market day is going to probably be very boring. Same thing with Friday. I believe the market will be open on Friday as well, the day after Thanksgiving, for a few hours. Also, the action will probably be very poor and boring. But let's see what happens on Monday and Tuesday. If we can get a little bit of a relief bounce. If we get a relief bounce, I wouldn't necessarily think it's going to be going very high. And then, like I said, maybe into early next week we start to roll over. So as far as some of my positions, so let's go ahead and just start here. I've made a lot of changes to the portfolio since this last video that I made at the end of September. So on this massive sell-off here, I started to get into Meta. You can see my average is 629. I bought 13 or owned 13 shares. I've been kind of buying as we come down. My last area that I'm really looking to buy, and then I'm going to let this position kind of play out for a while, is this trend line here. So I really want to probably buy another 5 shares in this gap fill area between 570 and 550 if the market gives me the opportunity. So somewhere around this 567, 570 is where I want to probably buy at least another 3 to 5 shares, depending on what my portfolio looks like and what other positions I'm wanting to get more aggressive in. Now, the Amazon position I had built out quite a bit in October. So I own 20 shares at 224.25. It had this really nice gap, and I was, thinking this is great. This is, going to run. Now it's completely gave back that whole move, but it's still holding the 200-day moving average, holding the anchored VWAP. So we'll see. There's still this gap fill down here in the 200s. I don't necessarily know if it gets down there unless things really get pretty bad here quick. But if it does, I'll add to the position more there. But for now, I'm just leaving it steadfast. AMD have got pretty aggressive here on this position, on this recent drop. My average used to be somewhere down here in like the 159s or something. I sold a lot of shares up in here, let it run more, and then I started to add back recently. So I have 35 shares at 193.86. If it pulls back and starts to fill this gap from 170 to 204, so you can already see it starting to fill this gap. I'm going to buy more in this 180 range. Even if my position starts to go negative overall, I'm probably going to try and get this position up to close to 50 shares, because I still believe that AMD is going higher based off of the chart, and some ratio charts that I use against other stocks and stuff. So if it pulled back and hit this anchored VWAP or even the 200, I wouldn't go crazy here, but I probably would still add some more to the position. Um, my Nebius position, I started this position just about a week and a half ago. So I bought some shares here. I bought a couple more on Friday around this, like on this trend line here at the 80 level. The next area that I'd like to see is for us to fill this last gap. This was the Microsoft deal gap here that went from, what was it, 64 up to 95 or something like that. So I'd like us to fill this gap, maybe even get down here to this 200-day moving average, and I'd probably buy more shares somewhere in between 70 and 60 is where I'd be looking to definitely buy more shares. You can see here volume starting to come back in on these candles here, telling me people are starting to add to their positions and maybe get a little bit more aggressive. Now, some of these last couple positions besides Oscar and the Ethereum position are more speculative plays. I've been watching a lot of videos on AST Space Mobile and Rocket Lab, and just liked the path that these companies are headed. More so, I should say, the vision that they're selling. Now, after last night, I watched a lot of videos on AST Space Mobile and Rocket Lab, and while AST Space Mobile seems more exciting, it also seems like there's more risk involved with this company, but more risk could also mean more upside. So I bought 25 shares on Friday. The reason why I bought it was at this anchored VWAP. So this was the April 7th low. This anchored VWAP, it hit it. You can see here, not a little bit of a bounce, but nothing crazy so far. I still expect that it could come down and test this 200-day at 43 or even back at this 40 level. There is a nice uptrend too that I have here sitting around, depending on when it would hit it, maybe in the 30s. So I didn't get too aggressive. I bought 25 shares, which is $1,000, nothing crazy. But I think that it's a stock that I'm going to continue to watch and start tracking the fundamentals and, overall balance sheet of the company, because I want to see what happens. If it starts to show that, they're able to deliver on what they're trying to sell, then I might get more aggressive with the position, because this stock could be, in the early days of like a Tesla type of, position and stuff like that. So we'll continue to track it, but I did start a position here. Now, Rocket Lab, I actually almost bought another 100 shares on Friday before the close. I bought 50 shares here at $40. So it's a $2,000 position so far. So nothing insane. Once again, I think that this position also could pull back a little bit more if the market presents more weakness, maybe into this 30 or even maybe 25, which I would definitely get more aggressive at that point. But I think that once again, this company also has some risk. It's competing with SpaceX, which is Elon Musk's space company. But I watched a couple videos yesterday on some guys that are heavily, heavily invested in Rocket Lab, and I was trying to understand the fundamentals a little bit more. Neutron is their big baby. It's essentially, from my understanding, a rocket that can be used multiple times. That's trying to deliver satellites into space and things like that. So that's going to be their biggest catalyst, I believe, going into early 2026. I think the first launch is somewhere scheduled in Q1 of 2026. But you can see here that overall the chart doesn't look awful now. It had this pullback in April, ran really hard, and now we're almost down 50% from the highs. So there's still risk. There's still risk if I bought, $4,000 worth of this stock that, it could come back down one day to $8 or something, and I could potentially be down $3,000 on the investment. But it's definitely a company that I think that if they, once again, just like AST Space Mobile, can deliver on what they're trying to do, could be a huge stock, 5, 10 years from now. I mean, this stock could be $700-800 stock potentially down the road. And that's not including dividends or if it split or anything like that. We'll continue to kind of track the position and see what happens. But I just wanted to update you guys on these are probably two of my biggest speculative positions that if I felt comfortable and I felt like I was understanding the business more and understanding what's kind of going on, that I might take some serious risk in. And by serious, I mean, probably nothing more than between the two of them, 10 grand. But granted, I don't have a massive account. So putting that kind of money into these stocks poses a big risk on a small account that I'm trying to build up. It could turn out really great. These stocks could be up, Rocket Lab a year and a half from now or 2 years from now could be a $150 stock. And if I bought 1,000 shares, I could be up almost 15, 20 grand on that position alone, which would be great. But like I said, there's also downside risk here, or there's risk that it could just chop sideways for a lot of years and I might have to, wait it out and stuff. I mean, Tesla for a lot of years, I would say at least 5 or 6 years, kind of went sideways. It was stuck in this range, and then I think it was 2018 or 2019 had massive upside that finally broke out. So we'll kind of see what happens here, and we'll see what happens with the company. So HIMS. So I was in HIMS earlier in the year. I got back in on Friday, and the reason was, I mean, there's just been complete destruction in the stock over since what? This was October 16th. I mean, down, let's see, over at least 50%, almost 50% from where it was in October 16th. So not even a little over a month, and it's down 50%. Now, the chart doesn't look great. It's below the 200. It's below this all-time low anchored VWAP. So it doesn't show great bullish fundamentals. But from a long-term perspective, I think that this company will compete well in the healthcare space. And I don't think buying 58 shares at this level is a bad risk to reward. I think that eventually, I'd probably say in the next couple months, HIMS is at least back in the 50s. There is a gap fill here between 30 and 29. I think it could potentially, if the market has some weakness, fill this gap. I'd probably even buy more here at 25. This is the IPO all-time high. You can see here it presented as resistance, support. It wouldn't shock me if we see this back at 25. If we see this back at 25, there's a good chance that if I haven't added somewhere in here, I'd probably buy 100 shares here and turn this into a 150 or 160 share position, and then let that position ride for a while. Because that would probably be, I don't know, maybe $4,000 of a position here. So we'll see what happens with that. Now, I've been in Oscar for a while now, and it has caused some pain. You can see I'm down almost $1,300 on the position. I've added quite a bit. So I have an average price of $17.19. I own 350 shares. But I'm not panicking. Nothing in this structure here tells me that we're in some bearish downturn here. This has been the pattern since, when did we start this? So we started this pattern in March of 24. So almost this upcoming March will be 2 years we've sat sideways. Nobody has made money on this stock in 2 years. However, you can see all this volume over the last, let's call it 6 months, has started to come in. There's been volume starting to pick up. This level that I have out here is still holding. Would it surprise me if we came down back into this $10 range where I have this shaded box that I've had for a long time? Probably not. I think that, there's a chance that we could see a relief bounce, but I'm not sure exactly where, but I wouldn't be shocked to see it come down to 10. This is where I probably would put myself in a questionable moment, because I think that the long-term vision of this company in the healthcare space is very exciting, and I think that there's a lot of potential upside. But at the same time, too, you have to manage risk as well. But I think that where I'm at, and I'm not down $1,300. Yes, it's it's not great to swallow every day, waking up and seeing your positions down $1,300, but it's not the end of the world either. But I would probably be inclined if it got down to between, I'd probably say this low of 11.30 and got in here in this $10 range. I'd probably buy another 150 shares and turn this into a 500 share position. That's how much I've liked the chart overall. And I think that, this looks like kind of white coffee looking accumulation here. I really thought this was the spring if we're going to go to that type of terminology and we were going to move higher. But there could be one more. There could be one more that could be the spring if we break this low and then have a big push back through. And then, we could go sideways and then start to head up toward, I still think the IPO all-time high of between $29 and $37. So we'll see what happens here. Now, the last position, this position hasn't worked out exactly as I thought, and I'll tell you why. So reason why I was been buying the Ethereum ETF, which is ETHA. I added quite a bit of that. I started buying that ETF when Ethereum got to this level here. I thought that this was going to be the potential bottom with the 200-day moving average, and as you can see by the chart, I'm dead wrong. So I am down quite a bit on this position as well. I bought 300 shares, down almost $1,200 on this, and it's been a little bit hard to swallow. However, I still believe in the long-term vision of Ethereum, and I don't plan on selling this position at all. I still think that we're going to make a move back to this towards all-time highs, somewhere maybe in early Q1. Everybody's been calling for crypto to have this massive rally before the year end. I don't necessarily think that's going to happen. I think that they are going to shake as many people out as they can. It wouldn't shock me if Ethereum comes back down here and tests 2100 at all. I think they are going to cause as much max pain on Bitcoin and Ethereum before they finally reverse this. Now, I don't necessarily think that the Bitcoin chart looks super bearish. I know everybody's all worried and saying, oh my God, it looks so bearish. I'm not in that camp. I think that this is a normal, healthy pullback based off of the Bitcoin chart. Now, could it come down and test this 74 again? It needs to hold this level though. This shaded box needs to hold, because if we start to break into the 60s, then I'm not a Bitcoin holder. But then I would be concerned for people who had been buying up here, and I mean, you're down almost 50% at that point. And if you believe in Bitcoin in the long-term vision, that would be somewhere to add, but that's something that potentially, you got to consider. I mean, if I'm thinking Ethereum could come back down here, this 2200 level, Bitcoin's coming down to this 75 probably level for sure, where the April low was. Maybe you get a double bottom off that, but that's where I'm at. Let me show you what I'm doing down here. So you can see here, I have $29,000 in my account right now. These are all my positions here that I just went through. Sorry, my screen is blocking things over here, so you can't see the tickers, but this is where I'm at right now. And, like I said, I'll keep you guys more posted. I'll make another video probably in early December and see where we're at. And we'll hope that, I'm hoping that as much as it's going to hurt to see my portfolio continue to go down, I'm hoping that we get at least a push, another 3 or 4% down. And I'd like to see the VIX at least above 30, somewhere close to 35 would make me feel better. Now, if we get VIX 40 plus, I'm going to be buying heavy that day, because I think that anything above, 35 plus of a VIX is telling me that people are really starting to get panicking. They're selling positions. They're capitulating a little bit. And that's when I'm ready to go into the market, because I have a long-term horizon here. I'm not planning to just get out of these positions tomorrow. So we'll see what happens, though. I hope everybody has a good weekend and good holiday, and I'll update you guys at the 1st of December.